please do note also that the stock market is a leading indicator, meaning before things happen in the economy, it's spotted in the stock market first. Meaning the stock market will reverse first way before we see this economic data also come out. But that being said, also if you're just going to look at it from purely a stock market standpoint, one of the things that you could figure out also that it's somehow close to reversing is when it seems the bleakest, when everyone is the most scared, when people don't want to come in. There may be bankruptcies that would come out. There may be companies that would go out of business that will have a hard time, or there will be disclosures from an economic perspective that may not be generally good. Hey guys, so by the time I'm making this video, we've seen a lot of selling happen in the stock market and the crypto market. There's been a lot of downward pressure, and all of that, as you all know, there's a lot of things happening in the macro. There's wars, and when you look at the US, there's impending fears of a recession, which I think when the numbers come out, it's just a reflection, or it will just be a validation of what we all knew over the past few months, that they're really in a recession. Now, that being said, people have been asking, when will the stock market get better? When will the crypto market get better? And in this video, I want to share 4 signals to watch out for as a parameter for you to know that whatever upward movement or reversal that will happen is supported by what's happening in the economy. And when I say upward movement, I'm not just talking about 1 or 2 green candles, but I'm talking about generally changing the trend from something that was headed down into something that's reversing up. But not just that, from a sentiment standpoint, people are optimistic to come back again. You see more people, retailers and institutions, willing to buy at a higher level, regardless if it's in the stock market or in the crypto market also as a whole. Now, before I say this, please do note also that the stock market is a leading indicator, meaning before things happen in the economy, it's spotted in the stock market first. Meaning the stock market will reverse first way before we see this economic data also come out. But that being said, also if you're just going to look at it from purely a stock market standpoint, one of the things that you could figure out also that it's somehow close to reversing is when it seems the bleakest, when everyone is the most scared, when people don't want to come in. There may be bankruptcies that would come out. There may be companies that would go out of business that will have a hard time, or there will be disclosures from an economic perspective that may not be generally good. That's it from a sentiment standpoint. But how will you know that the stock market and the crypto market will get better? So here are the 4 things to look out for. Number 1, look at inflation. And please do note this. A lot of the things that's unfolding right now in the US Fed was brought about by their response to very, very high inflation. And I've said this in different videos that one of the reasons why there's massive amounts of inflation is because they printed an unprecedented amount of US dollars as a response to the pandemic. Of course, there's a lot of things also that contributed to that. You have the war in Ukraine and Russia. You also have a supply chain backlog. But how do you know it's getting better? When you see inflation start to wane down, when you see the figures start to trickle down also. Here's a trick also when analyzing inflation, that when you gauge where we are right now, regardless if you're in the States or in the Philippines or in Europe or in South America, inflation figures across the board are generally higher. But that being said, if inflation figures are generally higher, that means you're coming off a very, very high base. That means for next year, it will take a very, very large amount of price increase systemically to be higher than where we are today. So just by the base effect alone, I really believe that there's a big chance that at this time next year, inflation would be generally lower. But that's not a guarantee. We don't have a crystal ball on how things will unfold. It's still too early right now. But what I'm saying is this: you want the economy to confirm that the market really is going up. You want it to have legs. Watch out for inflation. Look at the charts that instead of it going up, you want it either flat or you want it starting to go down. That's number 1. Number 2, highly connected to that, one of the reasons why the Fed is raising interest rates is for them to combat inflation, is for them to fix whatever is happening right now. That's one of the things that you should look for. Look for the opposite. At this time that there's a lot of fear, uncertainty, and doubt, they're raising rates. Wait up until they start dropping rates once again. Prior to all of this that was going on, they raised rates very, very unprecedented at 0.75. That didn't happen in a very, very long time. And for a very, very long time frame, interest rates were very, very close to zero. That meant that people who left their money in bank accounts weren't getting any. But that also meant that people who would borrow money could borrow at a very, very low rate. Now, that being said, that era, by the time of this recording, is currently over. When the Fed starts reducing the rates again, that's your second signal. That's the next thing that you could look out for, that things are starting to get better. There's a bigger shot that we may actually come back to where we were before. And there's a lot of analysis saying that whatever's going on right now, it's something that won't last for a very, very long time. You can also check out how Japan did it, how they dropped rates. It pushed back up again, but it started to go back down. Now, that being said, highly connected to that, number 3 is this. When the Fed starts doing quantitative easing, the money printer comes back again. Please do note right now, it's a season of tapering, trimming the balance sheet. When I say trimming the balance sheet, they're not buying bonds anymore. The reason why there was a lot of people investing in both the crypto and stock market in 2020 and 2021 was because there was a lot of free money floating around and it had to go somewhere. And what it did was it inflated assets. And it made a lot of people who invested in those assets better off. But if you look at it also from a certain perspective, it made houses, which is also an asset, more expensive. And it made it also unaffordable to a lot of people. That's the third thing that you should watch out for. Quantitative easing happens when there's a low interest rate environment. You can't do that. From what I've noticed, they did not do that while interest rates were relatively higher. And then number 4 is this. But this happens on a quarterly basis. Look at the GDP when it starts getting out from negative growth territory, where it is today, where it's actually shrinking, versus when you see it back on the path to growth, back on the path to recovery. That makes it relatively sustainable. So look at inflation, look at the interest rates, look at quantitative easing, and look at the GDP. Couple of things also that could influence all of this. Look at what's happening to China, what's happening to the property market there. Also look at the entire transport / logistics in the entire world. There's a backlog on supply. When that starts to get better, that will signal also that, okay, it seems like we're turning around already. And please do notice, everything that I'm discussing, it doesn't anymore factor COVID. A lot of people were scared about that in 2020, but everything that I'm discussing right now doesn't factor that anymore. Even right now, a lot of people are traveling. If you saw all of the baggage that was stalled in Europe, that's a lot of people revenge traveling, and it's not anymore as big of a deal or big of a factor as compared to what it was last year or what it was in 2020. I myself have traveled and will continue to travel already because it's not one of the biggest factors. One of the things that I'd like to also submit is highly connected to inflation is oil prices and also the war in Ukraine. When there's somehow a ceasefire or there's agreement that happens, that would be net positive, not just for the stock market and the crypto market, that would be net positive from an economic perspective. No one wants war. When you look at it also from that perspective, Russia, Ukraine, oil, please do note, one of the things you need to consider is Russia supplies oil to the European countries. And by the time of this recording, we're 4 months away from winter. And they need that gas. They need that oil when things get colder. So what would happen in between would somehow also determine how big of a problem we will have, or will this be something that will be short-lived? So oil prices, if it stabilizes and goes lower, and also the war in Ukraine. Use those 4 tips and then surround it with the other bonus things that I mentioned to all of you. If you want to know more about the economy, just search it, Marvin Germo Economy, Marvin Germo Macroeconomy. We have so much videos in YouTube that have been lined up for you. I have over 2,000 videos already here in YouTube, and I do hope that this is something that gives you value. And I'll never stop saying this. The reason why I continue to create videos like this is I want to educate you regardless of where you are in the world, so that you have the right information, you get to decide properly, and you come in with conviction, especially right now where there's a lot of confusion, there's a lot of uncertainty, and people don't know what to do. If you're the one that is risk on and knows what you're getting into, I'll say this over and over. At times when people are scared, at times when people don't know what to do, but you're the one who's deploying capital properly, taking the time to study it, and not just blindly investing, but being strategic with your investments, I really believe that you'll do very, very well. If you want more, details are down below. Books that I have, webinars and seminars that I've created, you can check it out. I do hope that those resources would help you. And if you stayed up until the end, I appreciate it if you like the video, you could share it to people that you know that may benefit from this. And if you want to get updated every time I create videos like this, press the subscribe button. But so that you get notified by YouTube, you have to press the bell so that it pops up, you get notified every time a video like this would come out. And here's the thing, if you guys have any questions, just put it down below. I'll try to make videos on top of that so that I could help you answer your questions. And in the same way, I do hope that it creates value to everyone else that's watching this. So that's it for now. marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.